What is profit shifting and why are governments concerned about this activity? Profit shifting is a strategic approach that is used by multinational corporations in high-tax jurisdictions to move their location of their profits to low-tax jurisdictions, and in that way they can minimize their tax liability. There are estimates that indicate that 37% of multinational profits in 2019 were moved to tax havens worldwide. For instance, recent estimates suggest that profit shifting could have cost the US prior to 2017 over $100 billion in corporate tax revenues annually. So how does this work in practice? Take, for example, the case of a US pharma multinational that develops a groundbreaking medicine. The way they would do that is by opening a subsidiary in Ireland, sending the ownership of the patent to the Irish subsidiary. This Irish subsidiary would have all the rights to use this technology to produce the drug, and they could license this technology to other countries. The subsidiary in Ireland would be getting royalty payments instead of the US company getting royalty payments, and these royalty payments in Ireland would be taxed at a lower tax rate. In that way, what the company is doing is moving profits from the US, taxed at a higher tax rate, into Ireland, which would be taxed at a lower tax rate. The reason why firms engage in profit-shifting practices in this way is because it's easier to move intellectual property than to move tangible assets. Intellectual property is an intangible, and that's easier to move around countries than, say, setting factories or moving machinery or equipment. Now, despite the simplicity, these activities can get quite complex very quickly because they tend to involve many countries, and making it challenging for governments to address effectively. And these practices are not limited to the pharmaceutical industry. They tend to happen in sectors that have a global presence and that have a lot of intangible assets. So they tend to happen in sectors like pharmaceutical and technology, but also in sectors like media, entertainment, retail, banking, and energy. Governments and international organizations have expressed concerns about these practices and the impact that they may have on lost revenues in high-tax jurisdictions. I'm Maria Santacreu, and I'm an economist and research officer at the St. Louis Fed. Visit stlouisfed.org for more information.